Here we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders can find this information more easily on the platform. So here what we're looking at is the 2-hour price chart. Each candle on this time frame represents a 2-hour trading period. And as we can see here, the main support level that we have been watching for this stock has now been broken to the downside. So, this really is not much of a surprise here. We have been looking for a bit of a retracement now that share prices have sort of fallen from these highs at 770. It has been a very strong run here, but, they say all good things come to an end. I mean, eventually these share prices have to start to move back toward their longer term moving averages, revert to the mean. So, as things stand here, what we're looking at is a fairly significant support break at $6.20. So that would be this area here. Now, the reason that I was pointing to this area comes from the fact that this was a prior region of historical resistance, as we can see here. If we go back to the September 26th trading session, we can see that 620 was an area of strong resistance. Share prices fell from there and then ultimately broke out above here. So this really was the breakout point. When you see that type of series of events, you would then start to expect that same price zone to work as support in the future. And then if that area does not hold as support, then the paradigm is shifted, and you start to expect to see share prices to continue to move in the negative direction. So this is what we're seeing here. And this is the proper way to be trading these types of stocks. You don't simply, follow the people. For example, there are a couple of people on this platform that only follow this stock. Number one, I would recommend highly against following any YouTuber that just follows one topic like that. Like there's a guy, I think he's called Mr. P, and he just makes NIO videos all the time. Why would you just make a video about one stock? There are a million different stocks in the market. Why not pay attention to somebody who has a bit more of an objective view? If you're following somebody that is only covering one topic like this, they're probably going to have a biased viewpoint. Okay, it's probably only going to be positive, even in situations where it's going to turn out to be negative, like this. So what we're seeing here is a very predictable movement here to the downside. I mean, eventually the stock had to start moving lower. So, at the moment, we can see that this 38.2% Fibonacci retracement zone has now broken to the downside, and we've also broken through the 50 period exponential moving average. So there are a few different things that have occurred here at the same time. If we zoom into the price chart here, we can see that this is ultimately a green candle. But if we really zoom in here, we can see that there is a price gap here. So really what happened here is that we gapped lower to start the day. And we can even look at a lower time frame to see this. But we gapped lower to start the day, as we can see here. This would be the price gap. And then share prices have now attempted to make a recovery out of here. So the presumption here is that you would start to see this price gap being filled to the top side. There are a lot of orders here that still need to be filled. So as share prices fall into that price gap, you would expect the share value to continue moving higher, at least until you reach the top of this price gap, which would be roughly here. So, you could be looking at a retracement back to roughly 623 or so before share prices possibly encounter resistance here again, because now this would be expected to work as a resistance zone. Okay, so we could move back into this area and then see share prices start to move lower once again. So I just wanted to look at this lower time frame just to sort of see, just to sort of look at that price gap there. So, what we're looking at currently here, now we're looking at the hourly chart. And, as we can see here, there are moving averages here that were coinciding with this 620 area. And we've now broken below all of those. So we've now broken also below this 100 period exponential moving average, the 38.2% Fibonacci retracement, and that prior area of historical resistance that would now be expected to work as support. It did not work as support. So what we have to target next here is the 200 period EMA, which also coincides with the 50% retracement zone. So at the moment, this is the near-term level to watch to the downside. Share prices really do need to hold here. This is 570, which was also an old level that we were watching. So it's got historical significance. It's a 50% retracement zone, and it's also the 200-hour exponential moving average. So we're going to probably test this area. I mean, I don't see any way around that really. And share prices do need to hold there because from that point, you're really looking at a quick test of the 618 retracement, and there are no other technical signals here that are helping support or strengthen that area. So that's a negative. And then in addition to that, you have to look at the indicator readings here because, as I said in prior videos, if you break through this uptrend in momentum in the relative strength index, you have now lost that entire prior uptrend. Okay, so this price area here, if we go back to the beginning of this indicator reading, this is the bounce off of 360. Okay, and then this ultimate price movement here does give us that high at 770. And you know, as we can see here, we pointed out this bearish divergence that was being created by that price high. This is the $7.70 area. As you can see, the indicator reading is moving lower while share prices are moving higher. That's called a bearish divergence. It's a very strong technical signal, and this did suggest that share prices were most likely to move higher. So I read in the comments, you know, why would you possibly say anything bad? Why do you cover the stock if you don't like the stock? I didn't say I like the stock or I don't like the stock. I don't inherently like something or dislike something. All I do is I look at the chart and I try to figure out what it's telling me. What is the most high probability situation that we're likely to encounter? This isn't about cheerleading for a stock, rooting for a stock, hoping a stock goes up or down, either direction. That's the wrong way to trade. And when people do that, when people get caught up in a mindset like that, that's how you lose money. Okay, and the people that are only covering the stock from the positive viewpoint, my advice would be to stop following those people, or at least have a bit of a more balanced viewpoint here, because no stock ever goes in one direction, and we're seeing a very good example of that right here. NIO cannot be expected to simply move higher all the time just because you have a position in the stock. Life does not work like that. It doesn't make any sense. So this current uptrend here has now broken, as we can see here, and this was the trend that resulted in all of that upside price action. So I do think that you're looking at a much deeper retracement here, and at the very least, a period of sideways consolidation. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.